If you're a student learning finance, your professors might be telling you not to let your emotions get the best of your long-term investments. To discuss what he's teaching his students, let's bring in Peter Ricchiuti, who is the Tulane University Freeman School of Business Finance professor. Great to have you here with us. So, what do you tell your students even during a week like this?
Thanks, Brad. One of the things we talk about is just to avoid the noise. That's the biggest thing. We're long-term investors, and we're mainly value buyers. And one of the things we try to push is that if a company does well, the business does well, the stock price will eventually follow. What I do every semester is, and we've been doing this for 30 years, I take 100 students each semester. I divide them up into teams of 5, and each team is responsible for writing an investment research report with models and everything else on a smaller company in the Gulf South. And these are not penny stocks. They're between maybe 100 million and 2 billion. And we've been really enjoy it. We've sent 1,100 students from the program to Wall Street, and of course that's your end goal.
Certainly. So with this in mind, what is the type of risk propensity you've seen students, especially generation over generation, right, change their thesis, change their strategy around how they want to be investors?
Well, one of the things about this generation, they're much smarter than us, I think. Maybe not you, but smarter than I was at that age. And but they've been through a very odd time. They're the gamification of the markets. They've been through the meme stocks and the day trading and Bitcoin and everything else. And so it's when we take them into the class, we're doing a very different analysis, because we fly them out to spend the day with the CEO and the CFO. We've had the best site visits in the free world. We've taken helicopters to offshore oil rigs. We've been to steel mills, chicken processing plants. So they see them as real companies, and they meet the real people that are running these companies. One of the things we make them do on the cover page is to come up with a 12-month target price, which they are incredulous about. I had one student tell me, he said, 12 months? He said, that's like 3 girlfriends from now. So I said, I don't know about your personal life, Jonathan, but I need a number on the cover page. So different kind of investing. And I think we really, I think we get to them too.
All right, we might need to have a talk with Jonathan, but outside of that, we're seeing more technology layered into how everyone is able to invest, and you're actually looking at artificial intelligence and potentially how that could even change the way that students learn how to trade and the role of AI in trading. What is your estimation, or as you look out into the future, what is your anticipation of how much artificial intelligence will be leveraged into investment strategies?
Well, one thing, very few people agree on this, but I think there's never been a better time to be an individual investor. I've been in this business for 45 years. Commissions have dropped to 0. Information is so easy to get a hold of, and that's really what it is. And by the way, we're looking at applied AI. We're not investing in AI companies. We tend to invest in a lot of meat and potato type companies. But what impact is it going to have on the companies? And one of the general things we believe is going to help earnings. And if you help earnings, you're eventually going to help stock prices.
And so just lastly, while we have you here, you're taking a look at, and the students have really kind of been able to take this opportunity and try to figure out if it's something that they want to do full time. What do you hear from students about the existing financial services industry that are wanting to enter into it and also want to kind of figure out, all right, is this pathway for me? What are students saying about that pathway right now?
Yeah, that's great question, Brad, because the bulk of them really want to go into the investment field, mainly New York, investment banking, although we've sent them all over the country. And one of the things they're hesitant about, or I tell them war stories at least, is just what the hours look like for somebody 22 to 26 getting in the investment business. It's pretty brutal. And the ones that don't mind that go into it. Others maybe want to find a different role other than investment banking.
Peter Ricchiuti, who is the Tulane University Freeman School of Business Finance professor. Thanks so much for taking the time here. Best of luck to you and the students this year as well.
Appreciate it. Thanks, Brett.